Good morning, everyone, and welcome to the DecisionPoint Trading Room. My name is Erin Swenlin with DecisionPoint.com, and I am here with my father, Carl Swenlin. How's everything going, Dad?
Pretty good, considering.
I know. One hour early makes everything a little bit trickier, I think, at least for our bodies to get used to. Let's go ahead and get started. Before I do, though, I wanted to let everybody know that we are not registered investment advisors. So all trading decisions are your own. Anything that you hear in this trading room or in our blogs, if you read them, none of those things should be considered a call to action. All right, I'm going to pass the screen to you and we can get going.
Okay, the big news, of course, is the failure of Silicon Valley Bank. Was out on Friday. This chart shows everything up through Friday, and they've stopped trading on the stock. But it's interesting that they're talking about it being a poor management causing it, and I want to point something out that. Some time ago, and I'm trying to get this thing out of my way. Well, first of all, here's Regional Banks Industry Group, and you can see that was down as much as 35% this morning, but it's been failing. It started really cracking on Thursday. Here's the problem. Remember, I had this chart up about a month ago, maybe longer, and I pointed out that we had a major change in the way bonds were running. They've been, for 40 years, they've been in a rising trend, and everybody's got used to that, and that's what I'm sure they've been assuming, or many people have, that it's going to continue that way, but it's not. It's broken down from that long-term rising trend line. Here's the yield on those bonds. Right now, we have a rally in bonds, and that is because of flight to safety. But basically, Silicon Valley Bank had an extra large bond portfolio and long-term assets and short-term obligations, and they just got squeezed. They weren't paying attention, obviously, and there are other things they were doing wrong. But the president says that all the depositors will be made whole, but the investors, management, not so much. We'll see. He said it's being touted as not a taxpayer bailout, but a rescue. I don't know the difference. If they're going to use money, they're going to be using taxpayer money. So we're going to be seeing a rally back towards this rising trend line, but I do not believe we're going to recapture that line and then continue to rise. Okay. I wanted to start with SPY. And notice that we started down today. I don't know. I'm not quite sure. We've been up and down all day long, and right now we're up, and looks like it's going to hold. We will be, I believe, seeing a 20 EMA downside crossover, which we call, of the 50 EMA, which we call a dark cross. That should be holding as of the close today. Note the current volume is very high already on the SPY. S&P 500 total volume it updates at the end of the day, so we have nothing on that, but it's probably going to be very high. It looks like potentially another climax. Upside climax here. Let's look at some of our indicators. We're talking about a climax. We've had 3 downside climaxes in the last 5 trading days. And first one is an initiation, which indicates we probably will continue to the downside in the way of price. On Thursday, we had a exhaustion climax, a downside exhaustion climax. And on Friday, another downside exhaustion climax brought on by the Silicon Valley Bank failure. Again, right now we're looking at potential to see an upside initiation climax today, but we'll have to see, because we could be all over the place before the end of the day. Okay, short-term indicators. We have the Swenlin trading oscillator for breadth and volume. And on Friday, these are end of day indicators. So as of Friday, they were down spike. Assuming we close up today, they're probably going to contract. And that would be bullish for the short term. Our intermediate term indicators, intermediate term breadth momentum and volume momentum. There, this is as of Friday, and they're pushing downward. I don't know if any upside today will change the direction. This is right. This level here, we'll call it bull market or bullish overbought. I'm sorry, oversold. And so that might be enough. But here's where this is really more normal bear market oversold levels. So I'm not sure if we'll get it down there yet. The dollar is down today almost a full percentage point, broken down from a rising wedge formation, which is normally what we expect. Gold is doing nicely today, almost 2% up. And we had a double bottom. That was encouraging. And it's on Friday, we broke above the confirmation line. And here we are. I'd say we've already reached the minimum upside target. And I assume we're going to go higher. Crude oil down initially, now rallying back up. It's in a trading range. Not sure when it's going to break out of that. Bonds, okay, rallying today. We're seeing a large rally in bonds. As I said, flight to safety, but right now looks like the rally may be running out with that dark candlestick. We'll see. Here's the 10-year yield, and it has crashed. But it's actually right now above the rising trend line. So maybe this is the end of that. Bitcoin, I can't explain this, but it's rallying. It's obviously flight to safety. I don't know. Here's as of Friday, the yield array that we have, and it's showing beginning of the crash. It's going to be undoubtedly lower today after the close. Something I did on the weekend is we had a sector list, which was the S&P 500, 11 sectors, and I moved charts into it that we have of the industry groups, the 6 industry groups that we track, that being banking, regional banking, biotechnology, gold miners, retail, semiconductors, and transportation. So that's, we've got the, I clicked one too many. We've got the charts like we have on this 11 sectors we have with the gold cross, and silver cross indicators. Plus, you'll notice we have the stocks above their 20 EMA, 50, and the 200 EMA. And let's go back to the banking. You notice for that industry group, we're looking at 0, 0, and 7% stocks above the 200 EMA. Let's take a look at the major tech stocks. Apple is rallying nicely today. Amazon up, but it's still in a downtrend. Alphabet, better known as Google, basically trying to go down today, but it's rallying off of this low. And don't know what kind of follow through we're going to get on that. Incidentally, as far as this turmoil we've got with the bank failures, I don't think we're done with that. That's just my opinion and the opinion of other people that I have listened to, Charlie Gasparino being one of them on Fox Business.
Mm-hmm.
There's Meta Platforms, still doing very well, did not break down from this island. Microsoft, looking like a double bottom right here. We're going to have to see how this shakes out by the end of the day. I really couldn't say if we're starting another rally or not. I just couldn't say. Netflix doing well, just bounced off of this rising trend line. That's nice. And the problem being it's got a 20 crossing down through the 50 EMA, and that's a dark cross. NVIDIA bouncing back up. Tesla, I wonder about this. And it's in a decline, but bouncing off today's low. All right, I think I can turn it over to you, or have I forgotten something?
You haven't forgotten anything, but you can't turn it over to me because I'm looking in Q&A and there are a lot of people interested in gold. And I know you covered it, but maybe we could look at a weekly chart, maybe a look at gold miners. That was requested too.
Certainly, we can do that. All right, this is the GLD. This is the EFT for gold, and that's what we run our signals on. The other golds that we follow is dollar gold, which is a continuous contract for gold. It updates at the end of the day. So it's going to be roughly 2% higher at the end of the day.
Yeah, I guess part of the question is, is it a good buy or has it rallied too much? I know what my opinion is, and I'm thinking it's the same as yours, but we'll see.
Hey, look, we've had a triple bottom here. It's been rallying off that, and we had a correction. Probably need to run a rising trend line along here, but now we have a double bottom. So I would say, yeah, it's looking like a good time to buy. Again, this turbulence could turn things around. So watch it closely. But yeah, I would say it's a good time to buy gold. Mm-hmm. Let's go to longer term chart. This is a weekly chart, and again, looks like it's heading higher. It's this pullback, and again, moving higher. So that's beginning a new up leg, I would say. And let's look at the monthly chart. Okay. Parabolic up move, a pullback of almost 50%, a cup with a handle going for us, a rather odd looking handle, but I think it's, it broke down here, but it's rallying again. So again, long term, I can't make out that. I need to see what
I think it's rising.
I think it is too, but
yeah.
Let's get the thumbnail up there. Yeah,
it's hard to say.
Right now, it's hard to. It's I'll have to say it's falling, but I believe it'll turn up pretty quickly. It's this pullback that got it to turn down. Takes a little longer. Let's see, the weekly I'm sure is rising by now. Yes, it is. So.
And
Okay.
did you look at gold miners? I'm sorry if I don't remember. I was working on something else.
No, I can do that.
Because that was another one. So I figured those two, I know you're pretty expert on. So.
Okay. Gold miners have been in a correction mode, and they're starting to turn up. You've got, they're coming off lows on above the 20, above the 50, and above 200. Again, the silver cross index is flattened and will probably turn up today. Golden cross takes a little longer, but it has been running flat, it looks like, for about a week. And double bottom breakout, I'd say we're headed for higher with the gold. These are good charts as far as I'm concerned for gold.
Mm-hmm.
Finally.
Right. We got that fake out rally on gold miners and, big pullback. I was thinking we might move all the way back down to 25, 26, but the reversal that we're seeing, particularly the continuation today, looks really good to me. And looks like we're actually getting that crossover buy signal here soon, which we didn't get last time. So this might be a good chance for gold miners to make a move here, certainly enjoying the day.
Right. And the PMO is below the zero and turning up. Now, when it's below the 0 line, it could be that negative input has lessened or stabilized or is gone away. But it could also mean it's rising higher. And of course, that's what it's doing. If when it's rising above the 0 line, that's pure upside momentum from price. So, excuse me.
All right. Excellent. I hate to make you keep talking here, but the questions I think are appropriate for you to answer. By an upside climax, are you thinking Monday will be the high of the week? Does this seem to be the reset trend and this is the beginning?
Okay. Okay.
Oh, I know for me, it's, I don't know that this is going to be a reversal. It's going to catch on necessarily, but certainly these indicators told us to expect this today.
Judging by the amount of volume we're seeing already on the, we're almost 3 hours in. Excuse me.
Making you talk too much today.
Yeah. I would say, I'm guessing at this point, but I think we're going to get a very high volume day. I think we're going to get climax readings on all the appropriate indicators, meaning the net advanced decline, net advanced decline volume, and then SPX up-down volume ratio, New York Stock Exchange up-down volume ratio. I think those will all be climax readings. And again, high readings on the SPX total volume for today. So that's what I'm looking for. But hey, we've still got about 4 hours to go.
Right.
So we'll have to see that.
I mean, one thing to keep in mind is, and I think Gary is the first name. I know it says G, but I'm pretty sure I recognize you. But one thing to keep in mind with climax days is really the way I look at them is that they're going to tell you what is likely to happen over the next day or two. But past that, it's sort of like a candlestick formation. Candlesticks are really 1-day formations. I mean, they could lead to a reversal, but really the expectation from a climax, from a candlestick, you're only looking at a day or two where you're going to get the resolution.
Right. Today I expect, and this can all change, but right now I'm looking for an upside initiation climax, which would mean we would go higher over the next week, or the rest of the week, maybe.
Yeah.
We would finish the week up at the very least. But
yeah, it's looking pretty good for that. But I don't know that this is a reset of the trend, the downward trend. I mean, certainly in the short term, we might break that declining trend line, but overall, I expect to see, this is sort of the rubber band got stretched so much that it's got to snap back. And that's kind of what's going on, in my opinion.
Okay, we've got a question on, can you explain why yields are dropping and what can we expect that the Fed continues to raise rates? Okay. That's another thing. One of the big banks was saying the Fed is probably going to freeze, stop raising rates, at least for this month. They won't raise rates. I don't know how that's going to come out.
I doubt it.
Yeah. But why are yields dropping? Because, okay, let's say you own a bond. The yield that you bought it at will continue to be the same yield. But people buying that bond today are going to pay a higher price, maybe not than, I'm just saying, than it was yesterday or the week before. They're going to pay a higher price. And the yield drops. When the price goes up, yields drop. That's just, this kind of reciprocal here. This is the 30-year bond, and this is the yield. You see bonds drop, yields increased.
Yeah, they're just like the dollar and gold, although I think bonds and yields are tied a lot closer, but the dollar and gold tend to have a inverse relationship, and you're going to see the same here. But yeah, usually it's just almost the exact opposite.
Okay, and what can we expect if Fed continues to raise rates? We also, CMA Fed Watch tool is predicting rate cuts in July. Would that be bullish for the market? Yeah, it probably would be. I don't know. Again, we have to see how this bank failure stuff is going to shake out. The banks are down today. And again, we don't know how this is going to shake out. The big declines like came out of 2008 start with something small and it snowballs. It just jumps across different areas. I wrote this article this weekend, and in it I said, we have bubbles in housing, equities, bonds, pension fund, crypto. We have a debt bomb, and credit card debt is at its all-time high. These are not, this is a horrible condition, and maybe this is the thing that's going to knock everything into the basement. Don't know.
Well, it's certainly hurting the financial sector. I'm going to be looking at that shortly. Let's see what other questions might be in here. I'll talk about, Marlene, I'll talk about intraday volume. Comments on the VIX. Do you want to talk about that one, or? Marlene does ask, do bond funds follow that same trend? Yes, typically they're going to do that.
Right. Okay, the VIX, I can start. Let me just see what we got here. Okay, we use a log scale, inverted log scale on the VIX, which I don't think anybody else does, but we like to show when it's oversold, we like to see that at the bottom. We also use log scale so we can see the movements, and when the VIX is at low readings, so we have some sense of what's going on in terms of it being overbought and oversold within the Bollinger Bands. Right now, it doesn't look too terrible to me. Let me look at the 1 year chart. Right, see, there's not a lot of fear yet, and it was fear at the beginning of the day, but it's moved back up away from we'll say the high of the day, but it never got as scary as was at these lows. So I don't think it's certainly oversold, and we could get a bounce, which again, as I said, I think we're looking for a bounce. We've got, there's the SPY volume. It's already above the 1 year daily average. Yeah, you have anything to add to that?
No, I think that at this point, we kind of wanted that VIX stretched out, so that we could get that snapback again. I think it's just another, the rubber band being pulled and extremes, and now it's going to have to snap back. And I think the VIX is just telling us that that's part of the what's going to happen.
Right.
Great question from Linda. Given what you just said, what should we do?
Yeah.
I'm sorry to laugh because I know it's kind of a serious thing, but you're here, so you're off to a good start.
Yeah, the Kennedy Gammas used to have the expression, he called them swinging riverboat gamblers. And I say swinging riverboat gamblers might be looking at getting in right now on a short-term basis and playing what appears to be the beginning of a rally. But I am personally on the sidelines except for UNG and gold. Mm-hmm. Somebody asked about UNG, and you know what? I forgot to put that up. But so what are you supposed to do? I don't have an answer for everybody. I think long term, by the end of the year, we will see new lows in the market and really way down lows in the nature of 50% from the all-time high, which was beginning of 2022. And here's what we got today. It looks like this is a 10-minute chart, and it's slowly been bleeding off. Let me just look at a longer-term chart on that. Well, not so bad. We've got basically looks like a reverse head and shoulders. Would you agree?
Yeah, absolutely. So good news there. And the PMO is turning up. So that's also good news for right. UNG and for us, since we both hold it. And I've gotten a lot of questions too, because it was down. My position, I know, at least 20% at one point. And, what do you do with stops? Honestly, UNG is a longer term play for me. So I'm going to be willing to experience that volatility down here on the lows, but I'm really counting on a really nice rebound, and it's going to make a huge difference to that position.
Right. Whatever's wrong with that market, I believe, is going to correct to the upside eventually. That's my belief. And as I pointed out last week, I believe it was, the natural gas futures are right around $2.5 to $3 per contract, and it's you get you get a 6% move on that's 3%, or it's 2 to 3%. Anyway, it's so UNG is not priced that way, but it's still dependent on what's moving is happening with the future. So we're stuck with with something that's really volatile. And at one point I was up 20%, and now I'm down about 2%. And
Right.
And I just think when it happens, it's going to turn fast.
Right. And I think we're in a pretty good position here for it. I will say that this is not how I trade stocks normally. This is not how I do diamonds in the rough for our DecisionPoint diamonds. I have a much different, more conservative view and more of an intermediate term, a little bit more of an intermediate term bent in DecisionPoint diamonds. So if you like the way we're getting ready to do the symbol requests here soon, if you like that, then DecisionPoint diamonds are certainly something you should consider. We also, since you're sitting here in a trading room and you're interested in trading rooms, DecisionPoint diamonds does have a subscriber only trading room on Fridays. So you will get the same information, but it's a much smaller room. So we definitely get to just about every symbol request. Unlike we really struggle to get a handful in, to be honest. So something to consider.
Let's be perfectly clear. We're not making a recommendation to buy UNG. This just has to be what we're doing.
Yes.
And that's it.
And that's the hard part of doing DecisionPoint diamonds, because I do let everybody know, if I own something, but more tricky is if I'm going to buy something, I need to let everybody know. I try to do that within 72 hours. So that you understand. But at the same time, it's a kind of a struggle, because I don't want everybody just jumping into what I jump into. If I don't have a perfect portfolio, I sure wish I did. All right, so let's go ahead. I'm going to switch us over to share screen, and if any questions come up that you want to answer, just let me know.
Great.
All right. My screen's acting weird. I've been trying to fix it all morning, so hopefully you can see this fairly clearly. Let me get this. For some reason, Safari just wants to be this darker color, and I don't know why. All right, so
StockCharts was having a problem with the quotes they were getting, and not their fault, but there was that problem. So if you see something weird, that could be it.
Yeah, absolutely. All right, so here is the look at all of the sectors on one page. I love this candle glance style. And what I'm looking at first and foremost are the price momentum oscillator configurations. And as you can see, all of these PMOs pretty much are headed downward. Looks like XLV might be making a move to the upside on its PMO. We'll look a little more closely at that. And it looks like XLU has gotten flat on the PMO, but is close to a crossover buy. So we'll look at those. But when you look at price overall here, I mean, obviously financials getting hit the hardest. $30 here, 30 on the XLF ETF. Looks like that's the next level of strong support. But as you were alluding to, and what I've been reading as well, is that this is probably not done, and that a lot of the big regional banks even are starting to struggle here. Not just these big houses, big banks. So this is going to probably reverberate for quite a while. On the bright side, it does offer us some opportunities. Number one, it offers us opportunities on inverse ETFs, but it also is going to offer us opportunities when it finally does bottom, because this is going to get really stretched out, this decline, and it's just going to be a natural snapback eventually. But I don't see it yet. And that PMO certainly doesn't suggest it's going to happen anytime soon. All right, so let's dig in, and we will look more closely at healthcare and utilities, since they have the only PMOs that look halfway decent right now. So we'll start with healthcare, and both of these sectors are considered defensive. So it does tell you the rotation is starting to move more into the defensive areas of the market. However, I look at this and I don't see a whole lot of good news here for XLV. These numbers are not as of today. These are from Friday night, and you can see that it was a terrible day. We all know that Thursday, Friday, and obviously Wednesday. Most of last week was bad for healthcare. And so consequently, we had the participation bleeding off. And at this point, we have less than 5% with their price above their 20. And let's be honest, the best time to get a stock generally is if it's above its 20 or it's just gotten above its 20. So there's, not a lot of choices out there. Only 11% over their 50-day EMA. Stochastics are starting to show a little life here, and certainly it is starting to outperform, but outperformance isn't always everything, because if the market is going down and it happens to go down slower, then its relative strength line will start to rise. So we have to be mindful of that. But I'm not seeing a whole lot here on the XL.
We're on the verge of a death cross.
Yes. So there's not a lot of good news here, but the PMO does look like it's flat, and maybe we're going to get a turn, but you can see it didn't amount to much the last time it turned. So I think the fact that it failed here this last turn, and if we get the turn, I'm not going to be really interested until I see something close to a crossover, because, we had some fake outs here and I wouldn't want to get faked out again. Utilities was the other one of interest. Looks like we're forming a little bit of a double bottom here. Notice the PMO is turning up. This is the only one with a PMO that looks halfway decent at this point. Stochastics turning up, but still very negative, spending most of their time below 50. So that tells you that there's internal weakness, and we really haven't shaken that yet. Certainly when you look at the participation, it's even worse than XLV. So we are seeing a turn here for utilities, likely a move toward these defensive areas of the market. I imagine that a lot of these participation numbers are going to improve before the end of the day. All right, so let's look over at a few industry groups here on our industry summary. So if we're talking utilities being the strongest at this point, we might as well look at those groups within there. Here's the banks, just so you can get a peek at that. That's just pretty ugly here. But, all of them are suffering. Everybody is being taken down here in the financial sector. There are no ones that are really coming out unscathed. That's not too bad for reinsurance, but oh my goodness. I mean, they're terrible. They look terrible, especially finance having a decent day, but not anything to bank on.
There was some mention that the Silicon Valley Bank is also involved with mortgage-backed securities.
Yes.
Go watch The Big Short again.
Yes, do. It's a great movie. I imagine most of the people in this room have seen The Big Short, but probably good for a refresher right now.
Yeah.
Gas distribution still looking like it's under resistance. Multi-utilities, we're getting a double bottom here. This looks very interesting for multi-utilities. Conventional electricity, I was already looking at last week. Double bottom starting to make a move as well. PMO rising. Water making a big comeback here, a big turn. PMO not reacting just yet, but definitely interesting. I think I'm going to look at AWK because water is interesting, and that is kind of the one for that. And let's look in multi-utilities a little bit just to see what kind of stocks are in that area that you could consider. So I organized them by scooter, and that brings the strongest at the top. The scooter is the StockCharts technical rank. And then if I just hover over these symbols, you can get a feel for what's going on, and maybe you'll find one you like. National Grid just got my attention based on this rounded bottom here, still below resistance here at $65, but PMO turning up. Notice stochastics suggesting internal strength is building, and relative strength is starting to look really good, not only for the group, not surprised, we just looked at that chart. So looking pretty good here for the multi-utilities and National Grid group. So let's look at AWK, and then I'll get right into those symbols and we'll just sail through those. AWK having a great day. PMO not quite turned up, but looking good. Stochastics not as good as we just saw in National Grid, but certainly relative strength against the market is improving. So it's an interesting chart, but I can't get too excited about it. Let's see where support's lying right here. Yeah, I would say this is the strongest support level down here, about 128. So there's a good chance it could make a move to the downside still. So I'm not a huge fan here. So let's go ahead and get into some more of these questions. I did notice somebody asking about intraday volume, so we'll cover that when we look at one of these other stocks. So gold looks like the first one. Not gold, but Barrick Gold. Really nice look here. Big move, just like we're seeing in all of the gold miners. Certainly this is one of the stronger stocks within. Get that out of the way for you. And I say that because you're seeing a rising trend line here, a rising relative strength, and that is against the group. So we know that we have a leadership stock within the gold miners. So that's something to keep in mind. So that's a pretty good looking chart, double bottom, still below the key moving averages of the 250 and the 50-day EMA, but it has made that leap above the 20. And I did talk about earlier, that's kind of when you want to look at a stock for purchase, is when it gets above the 20. 5-minute chart. I use the OBV for intraday volume. I think it works pretty well. It's, if you not familiar with the OBV, if price is up, the volume for that price bar is, you add it to the OBV, the on-balance volume. If it's a down tick, then you're going to subtract whatever volume was occurred during that period. So you can see right now the OBV is trending lower, confirming the downtrend here. Not a big surprise, but a big gap up here for Barrick Gold, holding this support level. We could lose that support level because the 5-minute PMO is in decline. RSI, though, is just went negative. I would say that you're looking at probably a fairly good buy point, but you would want to wait till at least that 5-minute PMO is turning up. Conservative buy points are PMO crossovers with a positive RSI. So you're kind of going for that look, but you can always jump in earlier or jump out earlier. If you want to get out using the 5-minute chart, you're just looking for a PMO that's turning down. So Barrick Gold looking good.
Okay. Erin, what is longer term for you?
That's a very good question. I'm often asked that. So to me, I look at the short term as being days to a week or two. And I look at the intermediate term as being a week, a couple of weeks to maybe a month. And then long term to be weekly, but tending toward months rather than weeks. So that's kind of my guidelines. I know you probably have similar.
Short term is days to weeks. Intermediate term is weeks to months. I guess that's longer term, isn't it?
Yeah, it's kind of, I mean, we're in the ballpark. There's no, actual, it's just a matter of our guidelines versus, I don't know what other people's are. And then we do talk a lot about the ultra short term, and that would be right here, what we're looking at right now.
Okie doke. XBI.
You know what? Let's go to our golden and silver cross XBI chart, because we do have the Biotechs with golden and silver crosses and that participation under the surface that we were talking about. And again, these numbers all down here are all as of Friday night. So we would expect to see these improve greatly today, given this 3% plus move here in Biotechs. But it doesn't necessarily mean that everything's hunky-dory, as they say. We've lost the rising trend here. It is trying to rebound and maybe recapture that rising trend, but that's a problem for me. Let me change this to candlesticks real quick, just so I can get a peek in here. The silver cross, golden cross, all falling. I mean, I think that this is going to be an interesting area, right? We just talked about XLV starting to look pretty good. And we are just about to this support level down here. You can see it matches up with that gap support, these lows, kind of these lows. So it's still vulnerable, I think, to a downturn. And I would be really careful. These stocks tend to be very volatile. So, I mean, I think XBI, it's making a rebound here. Healthcare does have a little bit of a bullish bias. So we could see this reversal hang on. But I would really hope that these numbers under the surface improve greatly after today's close.
What does XBI look like? The price? Enter it on this chart? No.
Oh,
yeah, it's just, this is IBB. I guess XBI is a biotech.
yeah, it's the spider version.
Oh, okay.
Yeah. And same thing, XBI doesn't look much different. I have to say, though, when I look at XBI, the support level has already been tested here. There's certainly more up here that's now resistance, but I like the look here of XBI. Like I said, I know that we're looking at a little bit of a bullish bias in healthcare, but just be careful with this one. It is very volatile, and particularly the stocks within the biotechs tend to be very volatile. So just be careful there. It's a great day, maybe 2 or 3 that we have ahead of us. But after that, they could get hit hard because they're in growth and aggressive areas.
Okay, Marlene wants to know, for an individual stock, what's a good intraday volume indicator?
And like I said, I like the on-balance volume on my daily charts, and I think it's useful as well on these 5-minute charts. You can still look for these divergences. Like you can see lower lows here on the OBV, but higher highs here. So that would give you a little bit of concern, if you will, but we are getting a breakout now, so that wouldn't bother me too much. And then I just add the regular volume bars underneath just to give me an idea of what's going on. But I think the on-balance volume is a pretty good way to get your intraday volume.
SLV.
All right, silver. Looks like it's benefiting from the move in gold, I'm guessing. Silver has not really been tracking that well to gold, though. Actually, let me make this big again. And I'm going to add the correlation to gold here at the bottom. I'll do GLD just because it's trading right now. But you can see that it tends to have a positive correlation. It tends to travel with gold. But that has started to fail. And you can see that silver has actually been underperforming gold for a while here. And this is not a relative performance line. I'm just making that leap because I can see that the inverse, the positive correlation is going away, and we know gold is on the rise and has at least stopped for consolidation, but silver did not. And so that's why you're seeing that difference in the correlation. SLV, though, against the SPY, you can see is starting to outperform. I think silver looks pretty good here. I would love for it to get above that 50 and 200, but this big move is looks very encouraging here for silver. Next level of resistance, right around $20.50. So just be aware of that. But I think it looks pretty good here on that breakout.
Okay. Gold is toppy on the monthly stochastics, so downside pressure near term.
All right, so let's take gold, and I'm going to add stochastics. And let's put it above just so we can see it a little more clearly, and we will make it a little bit bigger. All right, I tend to use stochastics more on the daily charts. They're, I don't know, it's just my preference. There's no reason why you can't use stochastics on charts that are longer term. I just prefer to only do it on the daily because they're very sensitive. And I like that on a daily. So stochastics here, I don't know, they're starting to improve, and we are in positive territory now. So really, when I look at stochastics on dollar gold, I see positiveness. Obviously, you can see it's just curling a little bit here, but overall, I think that stochastics look pretty good. Downside pressure is going to come based on the dollar, and the dollar, it is trying to make a rebound here, but you can see on the monthly version here that the dollar is seeing that PMO turning down. And I would imagine stochastics not looking that great on here, but we'll look real quick and we'll put it above and make it big. Yeah, and we can see even on the dollar, we do have stochastics turning up here in positive territory. So it's going to be really interesting to see if gold can overcome a stronger dollar. Right now, the dollar is down, though, for the week, and I think you were showing it, and it's down for the day, which is going to be good for gold. But just know that gold doesn't have to travel exactly opposite. And you can see that even back here at the beginning of 2022, gold was actually positively correlated with the dollar. So they can travel in the same direction. So don't get too wrapped up in that.
Okay. Will the big banks go up if people move money from smaller banks to large banks? I don't know about that. Certainly it will benefit them, but I don't know how it's going to affect the trading.
Right. Until things settle down and we know who's going to fold and who's not going to fold, I think we're really still quite vulnerable. And eventually, because like I said, this is a huge decline on the financials. In fact, I think I saw that somebody wanted to look at that in particular. And I know you did peek at this chart, but just so we can bring it up. So yeah, I mean, certainly if people move to these other banks, it's going to be good for their balance sheets. But I don't know, I'm with you, I don't know how that would affect the stock price until maybe we see earnings from some of those banks. And until then, we really would be flying blind.
Okay, AR.
Antero, first of all, I'd be very careful of stocks within the energy sector. They are tied very greatly to crude oil. Crude oil is in a trading range. It does not look like it's going to break out. If anything, it could very well break down here, and that's not going to be good for energy. They typically travel in unison, and particularly if they're in something that is related to crude oil, like exploration and production. Don't like this. We're back into, it looks like 52-week lows, more than likely. Relative strength is failing. I don't see anything here for a buy. Maybe we could look at it as a short. Can look very quickly here. We have 4 minutes, so I want to get to a few more. Yeah, I think you could possibly look for it as short, but it's now sitting on very strong support here. So maybe we will get a little bit of a rebound in spite of what's going on with crude oil. But looking at a daily chart like this, you would really be hopping in early. And with this sort of a decline, I'd be really, really careful hopping into this as a reversal candidate.
Okay, can you view SBR? It goes ex-dividend today.
Sitting on support, but we've got a PMO top beneath the signal line and negative RSI. I do not like stochastics topping here and below 50. They're kind of our early warning indicator. In my opinion, they're very, very sensitive. And seeing them turn down in negative territory, no, I don't like this at all. I would be very concerned about it losing support here. And if it does, the next level of support, I suppose you could say it's down here at 66.50, which down in here, that's another 8 to 9% decline. So I don't think I would be looking at this as a reversal right now, but certainly a great yield.
Okay, I'm not understanding this next one. Is TWILIO.
Twilio, okay.
Is that a name or
Yeah.
is that a symbol?
There we go. Twilio. You look at enough of these charts, you start to know.
Yeah.
You start to know them pretty well. Rising trend, short-term rising trend has been broken. It's trading above the 50-day EMA, but boy, I get it, guys. I know you're looking for some reversal candidates here, but I'm just not seeing it. This is a big double top. Certainly, I think this is short, a possible short, down to this gap support, maybe. I mean, we're looking at a pretty nice looking short of about 12 to 13%. And if it gets down to this gap level of support of these tops, that's 17% on a short. So I wouldn't want to be on a buy here because that's my downside risk. So there you have that. Looks like we're about done. Am I correct?
We have about a minute, and that's it.
I was thinking we'd look at our website before we leave. All right, guys, you can sign up to come live. If you're watching this as a recording, you just come to our homepage and hit register now. Of course, we have our free email newsletter. I don't send things out on it very regularly, so you don't have to worry about your inbox being inundated. We have 2 of the products. We talked a lot about DecisionPoint Diamonds, where I do my stock picks and have that Friday subscriber-only trading room. The DecisionPoint Alert, though, is our cornerstone. We feel that you should always have this before you even go into picking stocks, because you need to know what's going on in the market in general, with yields, with bonds, with dollar and gold miners, all of those, and the market, of course, studied every day in the DecisionPoint Alert. So come to decisionpoint.com, check us out. And at this point, I will end our share and wish everybody good luck and good trading. We will be back next week, and replays, if you're here live, are on YouTube. They go up at about 3 p.m. Pacific. All right. Thanks so much for joining us.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.